Everyone, I'm Stephen Kalayjian, and welcome to Back to the Futures. I'm here every Tuesday and Thursday from 1:30 to 2. We just saw an unbelievable sell-off just now on the S&Ps and the NASDAQ futures. The NASDAQ futures dropped roughly about 70. S&P futures were trading above the 06 level and just dropped like that down to 92, dropped 14. What was the condition? Well, the title of today's show is "The Uptrend is Still Intact." But remember when I told you right from the beginning that if you can master the art of divergences, you have mastered the art of trading. And one of the patterns that we had right here was the fact that when the S&P futures and the NASDAQ futures were making new highs, right, I then shift to look at the underlying ETFs, which I told you my researchers show me that during the U.S. session, you cannot, I've taught this to the top hedge fund managers in the world. It is very difficult to trade the continuous contracts, whether it's the S&Ps, the NASDAQ, gold, or whatever, without looking at the underlying ETFs. And this is very, very important, okay? Very, very important. And when you look at a pattern like what I'm going to show you, okay, and it's very clear. Again, I use indicator 1, which is a MACD, and I use indicators 1, 3, and 4 85% of the time. I use indicators 1, 2, 3, 4 15% of the time. And so what you're seeing here, okay, is you're making new highs right here. Okay, and if I draw my horizontal line, not only were we overbought on the 15 and the 30-minute time frames, but as we were making new highs on the QQQs, and I'll show you the same pattern on the spiders, right? We were making new highs on the NASDAQ and the S&Ps and the Qs and the spiders, obviously, but the MACDs did not confirm. So what happened? This is a sell divergence in a trend, in an uptrend, right? Or a correlation. So remember, my 5 conditions are a trend, a buy reversal, a sell reversal, a correlation, and a disconnect, right? So if we're seeing that, okay, we're then with the understanding that if you have a trend and you're seeing that the MACD is non-confirmed, it's not making a new high on the 15-minute time frame, well, that's why we just got absolutely cabooshed. We got absolutely cabooshed right there. And the S&Ps dropped, all right? It was a magnificent, magnificent pattern. But the thing that I'm going to explain, okay, is that when you're looking for these divergences, and they come long and or short, right, it doesn't make a difference because, as I told you, of the 5 conditions that I have, each condition has 2 strategies, a buy and a sell divergence. S&P futures, I would take a scalp short here. I would go 97 3/4, 97 and a half up to 02 and a half. I would look for a short here. NASDAQ futures, 15 up to 30. I would look to short. 15 up to 30, 35. So again, what's important, okay, is to have the true understanding of how to capture these divergence patterns. And these divergence patterns are all predicated by using combination methodologies, using multiple time frames, using the multiple indicators. And I teach this during my live stream each and every day. And I stream from 9 to 4. And then I have the good fortune to come on twice a week here on Tradier Hub to be able to teach each and every one of you what I've taught all my members, and the same concepts and teachings and guidance to the rest of the big hedge fund community individuals that I work with. But again, it's all predicated on you really fully understanding how and taking this gradually. This is a journey, not a sprint. You have a mentor, you have technology, right, to be able to visualize, to be able to see how these patterns repeat themselves on a daily basis, but more so give you the ability to be consistent, to be able to knock the ball out of the park each and every day. Remember, once you hit your goal for the day, you stop And then what do you look to do? You then look to be able to be in a situation that gives you the ability to trade the market effectively, efficiently, and be consistent, right? Remember the other key word, discipline. When I used to hit my goals for the day, I stopped dead on. I did not continue, and I just waited for the next day. But I kept on watching and learning and seeing and identifying, which was very, very important. Okay? Very, very important. All right. Okay, S&P futures. Let's see if we can get a push down to 93.97, where I look to cover. NASDAQ, I would look to cover here between the 02.5 and 10.5 range, and here everything's dropping right now. On the short pattern, this is a sell divergence pattern that we're picking up right here now. So again, if by me looking at this and I'm seeing the S&Ps and the NASDAQ futures pushing up, and I'm saying to myself, wow, you know, the MACDs are non-confirming. Okay, this is a sell divergence in a powerful trend. Like I said earlier in the beginning of the show, the title of the show is the continuation of the uptrend that we've had since last Tuesday or Wednesday. But remember, it's okay, because if you get these buy and sell divergences, all right, you get them whether you're in a negative trend and or a positive trend. And that's exactly what we've been in. You don't think that there have been phenomenal shorting opportunities and uptrends? Today, I'm not going to mention any names. I had some sell divergences on some really big stocks. And I said to the guy, I have this individual, and I said, I'd like to look to potentially give you some short ideas in these. He said, no, I only want longs. Okay. Well, one stock dropped 20, the other stock dropped 50. Okay. All right. So again, that's his money. I can't do anything about it, but I like to play the market both ways, because as my research has shown me that, again, of the 5 conditions, you get 2 strategies, a buy and a sell divergence. And when you get these 2 strategies for each condition, obviously there are different strategies to be aligned with that. But again, it's all predicated on being able to identify the market, identify the pattern, and these patterns, based upon my research, repeat themselves over and over and over again. Okay. Now, you know, gold is absolutely got caboose today, right? And, you know, I want to shift gears here, right? Gold, I had big sell. I'm going to show you this gold here. All right. The GLDs. Because again, this is important to be able to identify these type of patterns. All right. So if you look here, all right, you look here, this is the first short on the gold right here. Okay. After the 15-minute, the 30-minute, and the 60-minute reverse to sell on the GLDs. So what do? We wait patiently. Once the 15, 30, and 60 reverse to sell, what do we look to do? We look to short the first bounce on the 15-minute time frame. Bada bing, bada boop, bada bop. There it is. And you can see what gold did. Gold was trading probably around the 26.65. Gold dropped $17 off of that pattern. So again, it doesn't make a difference if you're trading oil. So I had a gentleman today. A gentleman said to me, Steve, I want to buy oil. I'm dying to buy oil today. I can't give investment advice. And I said, before I started the day, I said, I wouldn't be looking to buy oil, because right now the underlying ETF, the 15, the 30, and the hourly time frames are in sell mode. And he's like, oh, wow, holy cow. And guess what oil is? Down on the day, right? Oil was trading around the 60, almost the 69 level, and oil dropped all the way down to 68.30. It's 68.30, right? Oil never gave me an opportunity to look to buy oil, not once. Okay, so if that's the case, right? If that's the case, then what you want to be able to do, you want to be able to do what? Be able to identify the trend by looking at the underlying ETF. I said this over and over. I've taught this to some of the top hedge fund managers in the world. Okay. And if I teach them, I could teach you, because again, it doesn't make a difference. It's all based upon visualization and repetition. And I'm able to see that. So I did not give investment advice. I just said I wouldn't be looking to buy oil. The 30, 15, 30, and 60-minute time frame on the USOs are in sell mode. So why would I look to buy oil? Okay? Why would I look to buy oil? All right? Now I'm going to show you another great pattern here. Okay? So again, the 15-minute time frame reversed to sell on the 15, 30, and hourly on the GLDs. You wait patiently on that bounce. I think that bounce happened around the like 11:30 or so. I mean, gold absolutely got kabooshed. Kabooshed, kabooshed, and kabooshed, right? All right. So anyway, with that being said, it's important to understand these patterns. These patterns are powerful, all right? These patterns are pure mathematical. These patterns repeat themselves based upon my research, okay? Based upon my research. All right. What else here? Okay, let me show you this other great pattern here. Again, using the underlying ETF and the continuous gold contract, okay? So if you look here, you can see the gold right here, the GLDs. Again, they're in sell mode on the 15, the 30, and the hourly charts, right? Remember, the 15, the 30, and the hourly charts, okay? All right. Now, when you have that, and then the 5-minute time frame on the GLDs reverse to sell, okay, with the 15 to 30 and the 60-minute time frame reverse to sell, probably I think it was around the 11:30 time period, right? And then you look to short the first bounce on the 5-minute time frame. Here it is. You can short the first bounce by using my indicator 3 to be able to take that short. And then what happens after that? Boom. You can see what happened. Gold dropped about $4 here. If I take the high here on this, what was that? 142.50, and it dropped all the way down. Oh my God, gold dropped like $5 on that. Okay, so there's another great short there on gold. Okay, a really, really great pattern on gold right there. Okay, all right. So again, what's really important here? Okay, what's really important here, okay, is that when you're trading the market, okay, all right, okay, that we're able to identify these patterns, okay, okay, all right. What else here? All right. Let me just do that there. Okay. Again, so now I'm looking at the 30-year bond futures, and the 30-year bond futures reverse to buy. And I look at the underlying, the TLTs, which is the 20-year bond future. The 20-year bond future, in my opinion, okay, is really very, very strong. Very strong. And by it, there's no 30-year bond future. Okay, so basically what we do, we wait for the when we look at the TLTs in its place. So there's nothing, hey, gold, I would short this gold here, 52, 54 range if it gets up there. S&P should drop here. And again, what's relative here, okay, what's relative here is that when you're looking at the market, right? When you're looking at the market, whether you're looking at the Dow futures, you need to look at the DIA, right? The underlying, excuse me, the DIA, right? The diamonds, the underlying ETF. If you're looking at the trade, the RTYs, you need to look at the IWMs. If you're looking at gold, obviously the GLDs, gold just dropped too, so let's forget about that. S&Ps, I'd be looking to buy the S&Ps back anywhere between the 96 and 99 range if you're short here. All right. NASDAQ futures just got kabooshed. Again, just dropped. Gold just dropped about $1.50 there. So again, what's important is to be able to identify when you're trading the futures markets. That's the name of our show, Back to the Futures, right? To be able to look at the underlying ETFs during the US session. If you want to trade the Tokyo session, if you want to trade the European session, okay, you can trade the continuous contract outright, especially if you're trading the European session. If you want to look at the DAX futures or the Euro Stoxx 50 futures, same way. If you want to trade any of the foreign exchange futures as well, you need to look at the software to be able, again, looking at the three big time frames, the 15, the 30, and the hourly, and we look at the similar patterns on the 3 minute, 5 minute, and the 15-minute time frames. Okay. Oh my God, Coinbase, $6. Beautiful pattern. Beautiful pattern. Okay. So what we want to be able to do here, okay, what we want to be able to do is to be able to be in a situation, okay, that will give you the best opportunity. All right. I believe that the S&P should drop here. NASDAQ futures are dropping here. Okay, we just rallied. We dropped from 06 down to 92, 92 back up to even 01. Okay. But again, what's important is to remain consistent, to be able to identify these trades, be able to identify these patterns. And, so many people have said to me, as far as trading index futures, they said, wow, you really opened my eyes to be able to be consistent. Whether you're trading your own money, whether you're trading a funded account, like most people do, whether, they have these different funded account prop houses. But again, that's really up to, oh my God, that's really up to the individual, how they trade. What's really also important, okay, is to be able to look at a firm like Tradier that gives you significant technology on their front end to be able to execute, but also looking at the back office, the margin capabilities that gives you the ability to trade micros at $50 a micro, which is really unbelievable. I actually was with the head of the CEO of the CME on his birthday years ago in Chicago. And I never forget this. And he was so pumped up about the CME coming out with the micros. And kudos to Terry, because it really has transpired. So many people from the paper trading into micros, and then micros eventually into the big contract, okay? Because a lot of people were scared going into the big contract. It was an ingenious idea by Terry and the staff at the CME to go into the micros. And I literally sat at a dinner table in a restaurant called Rosebuds on his birthday and having dinner with the head of the CME, okay? So again, great story there, but more so, it's just another way from going from paper trading, taking steps up the ladder, taking paper trading, going into the micros, and then going into the big S&P future contracts or NASDAQ future contracts for that matter, okay? What else here? Okay.
We have a question, Steve.
Oh, we have a question? Sure. Sorry. Where is it? Hey, Steve, could you go over the big time frames like the 1 hour 30 and explain how you're using it? Let's say the 1 hour, 30 minute, 15 on buy mode, but the MACD is negative above the pivot, but you're still buying pullbacks. Well, if the MACDs are above the pivot and they're negative on the 30 and the 60, I'm more looking for shorts. Okay. And then I'm looking, if the trend still remains, Sev, then I'm looking for the big pullback on deep oversold conditions on the 15-minute time frame. Okay. 15, 30 or hourly time frames. So that's a great question. Again, everything I do is predicated on the 15 to 30 and the hourly. So if all three are in buy mode, but the MACDs are negative, here goes the S&P's dropping. Bye-bye NASDAQ. S&P should drop here. Okay. But again, if we have the condition where all three time frames are in buy, look at the S&P's drop. There you go, baby. Here we go. Here goes the NASDAQ. Kabooshed. Beautiful. Negative MACDs. Can I bring up the S&Ps really quickly here? I just want to show this to you on this pattern. So you see, oh my goodness. You see here, the 15 reversed to sell. So we have a disconnect between the continuous contract and the underlying ETF. Look at the S&Ps drop here. If you see this pullback, this bounce, look at the overbought condition into the negative MACDs. S&Ps dropped 4. NASDAQ just dropped 17. Unbelievable. What a great pattern there. Okay. Let's see here. Okay. All right. So that was a nice little trade there. S&Ps just dropped about 4 from the high. I'd be covering shorts here. Okay, on both NASDAQ and S&P. It's a nice little single here on that trade. Again, my researchers show me during the live session that during the U.S. session, I apologize, that we'll get anywhere from 8 to 16 great trades on the continuous contracts, on the underlying on the continuous contracts. Okay, on the regular stocks, I get anywhere from 4 to 6 great trades a day. But again, what's important? Wow, look at this Coinbase down $8. But again, what's really important? Okay, Sev, did I answer your question? Sev, did you understand that? Okay, I just want to make sure I answered the question properly for you. Okay, again, what's really important, okay, is when you're trading the markets, you want everything to align. Now, why did I call that short? Because the technology that I built, that I spent nearly 10 years of my life, gave me that pattern to signal the ability to go short, right? The ability to look at the market, take advantage of that pattern, and I knew that was it, okay? That it was going to be good for 3 to 5 maybe handles on the S&P. And it did, okay? All right. What else? Sev, I hope I answered your question. Right. Again, the pivot line that Sev is referring to is my solid white line, which is on every time frame. And that gives me the ability, that pivot line gives me the ability to see where that MACD is. If it's above the pivot, positive and or negative, and or is it in a way that gives me the ability, okay, to identify where the MACD is. And once those MACDs above the pivot, if it's negative, as Sev is indicating, or before where it was trading higher and the MACDs did not confirm, that gives me the ability to read the market and identify these divergence patterns. Okay. All right. Anybody have any other questions here at all? Anybody? Okay. All right. It's S&Ps just dropped about 5 here. NASDAQ futures dropped about 20. Again, if you're short, I'd be looking to cover shorts here. Okay. Unbelievable. What a short there on the S&Ps and NASDAQ futures there. Okay. If anybody has any questions, all right, please feel free to ask. Also, I do a live stream every single day from 9 to 4. You could contact me, text me, or call me after market hours at 914-500-7484. I return everybody's call. My goal is to help you be consistent, to be able to teach you, to be able to guide you, to be able to give you the opportunity to be able to be very, very, very successful in your trading. Okay? All right.
I have another question.
Another question. Okay. What about when the 15-minute is positive below the pivot and indicator 4 is still negative, and the 3 and the 5-minute goes positive on indicator 4? Yes. So what about if the 15-minute is positive, but the indicator 4? So there's another part of the equation. Are the 30 and 60-minute time frames bullish? If they are, then you buy the 15-minute time frame against the 30. If the 15-minute is negative, indicator 4 is negative, and the 30 and the 60-minute time frames are negative, well, if the indicator 4 are bullish on the 3 and the 5-minute time frame, we have what's called a triple Lindy. Okay, we have what's called a triple Lindy, and that's a buy divergence in a negative trend. But if you're now looking, if you're now looking at, oh my God, this Coinbase has dropped $12. Okay, Bitcoin just dropped about 3,000 off the highs here. Okay, again, what's important, what's really truly important here is to have the ability to look at the S&Ps just dropped 7 here. NASDAQ futures just dropped almost 30. But again, what's important is to be able to identify these trades, to be able to be in a situation that will give you the best chances of being successful on your hit ratio. Okay. And that's truly, truly what this is about. To be able, again, to be in this situation, to be able to give yourself to be profitable. I knew the S&Ps needed to be covered there, so that to me was a really good opportunity to cover. Same thing with the NASDAQ, okay? So Sev, I hope I answered your question. If I didn't, please text me at 914-500-7484, and I can hopefully go into it after the market hours, okay? Also, we're here next Tuesday and Thursday at 1:30 to 2. If anybody, again, like I said, has any questions, please feel free to reach out to me. And it's important that each and every one of you maintain the consistency, my 5 key words: consistency, discipline, confidence, patience, and passion. Okay? All right. Again, it's very, very slow. Tomorrow we have the employment number at 8:30, and it's going to be, we always wait for the dust to settle. And then once the dust settles, we go back in and we get involved in the markets. Okay. What else here? Okay. It's important to understand the using the multiple time frames. As I stated, it's really something that you're going to be able to identify and use efficiently. And what people really need to focus on is the ability to learn how to trade the markets effectively. And that's all I do. My legacy depends on your success. But again, if you have any questions, please be proactive. Please be able to ask away. Ask me. I'm here to teach each and every one of you. I want you all to learn. But more importantly, it's important that you all want to be able, that you take the time to want to learn, you take the time to want to be able to be great traders. Okay. With that being said, have a great day, everybody. God bless you all. God bless the United States of America. I'll see you next Tuesday at 1:30. Back to the Futures. Have a great day.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.